Please be advised of the disclaimers.
Hey everyone, welcome back to my channel, Sai with Pinnacle Trading. Let's take a look at how to actually play earnings or how to actually play options itself. So what we usually do is, hey, we say earnings are coming up on Apple next Thursday after market, and then we say, oh my god, the stock is great, it's going to go up, we're going to have bullish news, good earnings. I think the stock's going to go above 170, 175. What do people do? Jump on Robinhood and they buy the 170 call, 257, and bam, that's it. What happens? Apple, let's say it stays sideways or it goes down to 165, and Friday the option closes at 165. What happens? That's it. We lose max loss. So we're losing $257 for no reason. So let me show you the right way, or actually the better way with more chance of profit on how to play earnings, or even just if you're bullish on a stock, or even if you think it's going to go a little bit sideways, a little bit down, have some cushion. And let me just show you the method that I would rather do and what I teach in my course. So let's get rid of this, get rid of the 170 call. Let's look at the stock itself. First, we want to look at the analysis, and we want to look at previous earnings, how it did, do our due diligence, do our research. Don't just buy random calls and hope for it to go up and hope to make money. That's not what we do here. We look at risk to loss ratio, we look at all these things before getting in the trade. So right now, Apple, let's take a look at today. We see that it went down a little bit, and then we have a lot of big earnings coming up next week, like Netflix, Apple, Tesla, all these big stocks. So looking at the previous earnings, we can kind of see that every time it had earnings, they were pretty solid. I believe Apple, majority of the time, it has gone up after the earnings, or at least stayed sideways. It rarely has dropped after earnings. So do your due diligence on stock that you're playing this on. I'm showing you Apple because this is more than $3 trillion company and it's widely known. So I'll show you this example with Apple. So we see this at 166. So if I do think it's bullish, this is just my analysis, and this is just an example. Let's say I do think that it's bullish and I think Apple's going to go to 175 after earnings. That's about a $9 to $10 move from today. So even if I think it's going to go above 170, what do? I don't just go blindly 170 calls. What I do is do a debit spread. What that means is I buy a call below it and I sell a call at the strike that where I think it's going to go above. So rather than buying a 170 call, if we just did the 170 call, let's go back to that. What would happen with that one? Let's say the stock stayed sideways. Nothing happened. It stayed flat. Expiration 165. It just stayed sideways. I lose all that 257 that I put in. That's my entry. I lose what I put in. That's the great thing about options. We can limit our loss, we can limit our profit, or we can limit our loss and we can have unlimited profit to the upside, and just vice versa, things like that. That's a great thing about options. And we don't need too much equity to start with as well. So if we're just doing that 170 call again, let's pull that up, and we need the stock to move about 172.5. We need the stock to move 4%, more than 4% to the upside to break even. So if it goes to about 168, 169, 170 by Friday at close, we lose all that money, even though stock went up 3%. So why would I want to do that? If the stock is going up from where it is, I want to make money. It's not like shares. So what we want to do is, let's get rid of that. So we want to sell the call at that strike instead, buy a call below it. What happens? We do a call. This is a bullish debit spread. So what happens now? This costs us less. Our entry cost is only $111. And the stock only has to move up to 168.6 or expire at that price or above at expiration next Friday for us to get that maximum profit of 139. So my maximum profit is more than my max loss. That's our first advantage. Our entry is even less, 111. That's about half, about 257, less than half. And our maximum profit, chance of profit, is a lot more higher than just buying a 170 call and hoping that it goes up. So let's look at the chart. So our break even on that one was 168.61. So what can happen? Let's say the stock, let's pull up a closer chart. Let's say the stock just goes up to 170 after earnings, and then Friday it dips down a little bit to 169, 168, and then goes back to 169 and closes at 169. Then we have that little bit of cushion. If it goes to 169 at expiration, we get the profit. But anywhere over that 170 and above, we get the maximum profit over there. It's not unlimited profit. Let's say Apple goes to 200 by chance. Our maximum profit would still be there, but our chance of profit increases drastically compared to just buying a 170 call. So that's why I love using this method when playing earnings, or even just when I'm bullish on a stock, but I still want to give myself some cushion and I want to limit my maximum loss. So if you find that helpful, I really think this is a powerful strategy to use. You can use this during any time of the market. And also this protects you a little bit from the IB crush, which is implied volatility, which is where the premiums are a little bit higher during earnings and they immediately fall. Regardless where the stock moves, they immediately fall. So that also gives you the cushion. And then let's break that down as well. So if we're just buying the 170 call, our maximum profit is unlimited. Obviously, our max loss is 257. We need the stock to go up to 172.57 expiration and stay above for us to even just to break even. So we need a move, big move for it to even break even. Whereas we buy this debit spread that I showed you, our maximum profit for just one is $139 right here. And then our max loss, our maximum profit right here is 139. And then our max loss is 111, which is what we put up. And then our break even is 168.61. So what do you think right here? Our break even is lower, our maximum loss is lower, even though our maximum profit is limited, we have a higher chance of profit. So let's say instead of buying 257, you could have used the same amount of money and bought two of them for less than what the call you would have bought it for. So let's say we bought two. Our max loss will be $222, maximum profit will be double, $278, and our break even is still the same. So when you can buy two of them, you can buy more of these bullish spreads rather than just buying a call, have more of a chance of profit. And we only need a little bit of a move. We only need 1.7% versus just the 170 call. We need big move, about 4%. So more than double. So what do you think is better? I'm gonna go with the debit spread that I just showed you, the comparison, that I would rather buy two of them and have a lower break even and only need the stock to move about 1 to 2% for me to break even, worst case, and I still make profit if it goes above, and I make that maximum profit and I can buy a lot more of these versus just hoping that stock goes up and I need a 4 or 5% move just to break even at expiration. So if you found this video helpful, make sure to hit that subscribe button. I also call out all of these in the chat room itself, and we call them out in the swing trade, day trade ideas, many different option ideas. So chat room is completely free to join. Link is in the description below, or head over to my website, pinnacletrading.us. Click the join now for free button. And if you want to learn more strategies like this is just the tip of the iceberg. The course teaches you a lot more secrets than these. I teach you stock market education, the foundation, how to trade and invest, and some of my secrets to you, like one that I'm showing you in this video today. And also, a video will be popping up at the end of the video. Make sure to watch that to learn more about options and what I offer in the course. Thanks for watching. Hit that subscribe and like button, and also share this video so that people can learn and you can help them as well.